Today we're looking at the analysis report Plugstock, NASA Contract, Strategic Gain, Financial Reality.
It focuses entirely on Plug Power's new $2.8 million liquid hydrogen deal with NASA.
And we're going to jump straight in on how to really maximize the impact of this piece.
I agree. I mean, the analysis does an excellent job of setting up this key tension.
The tension being, is the NASA deal a real strategic turning point, or is it, just a drop in the financial bucket?
Exactly. And I think there's a real opportunity here to refine the structure just to make sure that the strategic impact lands with full force before the financial reality check kicks in.
Right. So the core argument, as I see it, is that this deal's strategic validation is worth way more than its immediate cash value.
It is. So I think we need to look at how that argument is sequenced.
Okay, so let's start there.
I wonder if we've considered how the ordering of the sections really affects the reader's belief in that strategic pivot.
What do you mean?
Well, the placement of that immediate financial counterpoint, it really risks minimizing the critical strategic validation that they just got from the NASA deal.
The analysis does set up the bull case very powerfully.
Oh, absolutely. It talks about validating their high-purity tech, breaking into this massive, $100 billion space economy.
And it marks that shift away from just selling forklifts. That's a huge narrative change.
It is. But the weakness pops up in Section 3, which is titled Reality Check, the bear case.
It comes right after all that great strategic discussion, and it correctly points out that, $2.8 million covers less than 2 days of their operating expenses.
Which, given their cash burn, is a brutal fact.
It is a brutal fact. But by hitting the reader with that dismissal so fast, you risk them just prematurely discounting the strategic importance of the whole thing. It sort of deflates the turning point thesis right after you've introduced it.
I see your point. But let me push back a little on that.
Okay.
With a company burning this much cash, shouldn't the analyst lead with the hard numbers? I mean, are we risking credibility if we bury that reality check just to make the story sound better?
That's a fair question. It's a classic editorial dilemma. But I'd argue that in strategic analysis, context really dictates placement. So the suggestion for improvement is to just re-sequence the early sections, let that strategic significance build up, and have maximum resonance first.
Let the reader really feel the weight of the NASA validation.
Precisely. You need to establish the value of this mission-critical contract, the high purity, the reliability, before you get into its relative financial insignificance. It keeps the reader engaged in the story you're telling about a major pivot.
So they internalize the win before you ask them to deal with the small dollar amount.
Exactly. Let the strategic win breathe. So one way to do it, very straightforward, is to move Section 2, the turning point thesis, so it comes directly after the catalyst announcement.
Make it the immediate response to the news.
Yes. Or if you absolutely have to keep the current order, you could just retitle Section 3 to something like Contextualizing the Financial Scale.
Rather than the jarring reality check.
Right. That softening of the language alone would help the flow a ton.
Okay, that makes sense.
And critically, when you do introduce the financials, you have to link the strategic wins back into it. Don't let them be two separate ideas.
So connect the dots.
Yes. Add a line like, while $2.8 million is small relative to the burn, the validation gained, it provides strategic leverage that you can't measure only in cash flow. That validates the whole resequencing choice.
That makes a huge difference. It's about managing expectations before you deliver the dose of sobriety.
We got it. It shifts the perception from, this deal is tiny, so who cares, to the deal is tiny, but the validation changes the entire long-term trajectory.
Okay, speaking of that long-term trajectory, the analysis brings up Project Quantum Leap.
It does. And that connection is maybe the most vital piece of this whole puzzle.
To prove the turning point thesis.
Absolutely. If this NASA contract is truly a pivotal moment, it has to, demonstrably advance the company's internal goals.
So to fully support the turning point thesis, the report should explicitly connect the operational success of the NASA contract to the company's internal Project Quantum Leap strategy.
That's it.
The report frames Quantum Leap as being about slashing costs, raising prices, and hitting gross margin break-even by Q4 2025.
Right. And the weakness here is that the analysis kind of isolates the NASA contract's impact from those specific metrics. It acknowledges the revenue, it acknowledges the validation, but it misses the chance to show how getting this high-purity contract actually accelerates those core targets.
Especially the goal of raising prices.
Especially that one. It's not enough for the contract to just exist. The analysis needs to show how it's a stress test for their new operating model.
But how does it contract for specialized, space-grade fuel validate cost reduction across their whole business. That seems like a stretch.
Well, that's the subtlety that needs to be explored.
Okay.
The suggestion is to really integrate a discussion on how the pricing and the reliability needed for NASA directly reflect those goals of raising prices and showing efficiency.
I see. If you're serving NASA, you're by definition operating at the highest level.
Which should command a premium and prove that your operations are mature.
That framing makes sense. High reliability equals pricing power. That's the core of Quantum Leap.
There you go.
So let's get specific. How could we draw that line more clearly in the analysis?
Okay, well, we could start by hypothesizing about pricing.
You mean ask if the hydrogen for NASA fetches higher margins than the stuff for forklifts?
Exactly. If the margins are superior, that's direct proof that the raising prices goal is viable. It validates the whole strategic shift, away from high-volume, low-margin stuff.
And that links right back to the financial timeline.
It does. You can use this contract as evidence to assess whether management's target for gross margin break-even by late 2025 is more or less achievable now.
Because meeting government standards implies process stability, which lowers operational risk.
Precisely. It's a crucial linkage. And don't forget, there was that recent $400 million capital raise mentioned in the report.
Right.
That's a perfect tie-in. Analyze the NASA deal in the context of that capital raise. This validation supports the idea that the cash isn't just for survival.
It's execution capital.
Yes, it's the capital needed to service these exact kinds of high-standard contracts that will get them to profitability in, say, late 2026 or 2027.
Making that connection explicit would completely transform the financial health section.
It really would. It changes the story from cash burn anxiety to one of validated investment for strategic execution.
It gives the reader a reason to tolerate the cash burn.
Because the capital is now visibly driving a high-level, margin-accretive pivot.
Okay, let's turn to the competitive angle. There's a detail in there, a killer detail, that the contract breaks the monopoly of traditional industrial gas giants.
That one sentence is pure gold. But right now, it's just treated as a side benefit, not a central feature. So the report introduces this powerful fact that the deal breaks a monopoly, but then it doesn't capitalize on this competitive disruption as a major part of the analysis.
The weakness being that it focuses so much inward on Plug Power's own numbers.
The cash burn, the EBITDA timeline, all of that.
And while that's necessary, it underanalyzes this huge external victory. This deal proves their network is reliable enough for mission-critical government work, which is a direct challenge to the incumbents.
That's a huge part of the strategic game.
It is, but I have to ask, is there a risk that by dedicating too much space to giants like Linde or Air Products, we dilute the focus on Plug Power itself? The report is about Plug stock after all.
Sure, but Plug success is defined by displacing those entrenched players. The analysis has to zoom out just a little to prove the value of the competitive advantage they've just won.
If this truly breaks a monopoly,
Then the value gained is exponential, not linear. And that's the suggestion for improvement. Elevate the competitive dimension. Dedicate real space to what this means for the big industrial gas giants.
frame the NASA win not just as revenue,
But as a proof point that could unlock much larger contracts down the line in that 100 million plus range by chipping away at incumbent dominance.
That's a fascinating angle. So what are some concrete ways to do that? How do we turn that detail into a main feature?
I'd suggest a full subsection. Maybe call it competitive disruption, NASA as kingmaker, or something like that.
Okay.
And in it, detail what exceptionally high purity and reliability actually means for NASA. Then show how meeting those standards demonstrates technological parity with or even superiority over the incumbents.
You establish the technological barrier that Plug just smashed through.
That's the real strategic capital, right there. And then you focus on how this contract sets a precedent.
If NASA trusts them, who else will?
Exactly. If the gold standard for reliability signs off, what does that signal to other high-standard industries or government agencies? You can show a clear follow-on market effect.
And finally, you have to quantify it somehow for the investment audience.
Yes. Suggest modeling the potential multiplier effect. What happens if just, say, 5% of that $100 billion space economy market starts to shift away from the monopolistic suppliers because of this NASA validation?
Suddenly, that $2.8 million deal looks very different.
It becomes the opening salvo in a multi-billion-dollar market opportunity. And that's a far more compelling narrative for PLGU stock than just focusing on cash burn.
That gives the entire analysis so much more depth and scope. It takes what was already a strong piece and really elevates it.
Absolutely. I think this has been incredibly constructive. The foundation is solid, and these adjustments will really help the analysis reach its full potential.